everyone, it's me, Buffy, and I am back with the last October episode of our weekly Market Insight series, which comes to you directly from our capital markets trading desk right here at Sunwest Mortgage Company. It was a highly volatile week for markets. U.S. stocks suffered losses as corporate earnings reports continued to be released on Wall Street. Disappointing earnings from most of the big tech companies wiped out $200 billion in their market value. These companies have been the story of the year in the stock market, with a frenzy of interest around artificial intelligence fueling gains for many of them. In what was a roller coaster week for U.S. Treasuries, yields have regressed after breaking the 5% threshold on Monday for the first time since 2007. The U.S. economy grew faster than expected in the third quarter. Gross domestic product, a measure of goods and services produced in the U.S., accelerated to 4.9 annualized rate, well above the expected 4.5. The jump also more than doubled the second quarter 2.1% pace, and it's the biggest gain in almost 2 years. The sharp increase was fueled by consumer spending at the end of the summer season, which increased 4% for the quarter. The Labor Department reported recently in 2022, employers ended up adding an unprecedented 4.5 million jobs. But at the same time, millions of Americans have been leaving the labor force since before the pandemic. In fact, we have 1.5 million fewer Americans participating in the labor force today compared to February 2020. New home sales were up 12.3% at the seasonally adjusted rate for the month of September. The surge in sales of single-family residences reached its highest level since February 2022. Data released on Wednesday by the Mortgage Bankers Association showed that mortgage applications continued to fall. The market composite index declined by 1% for the week ending on October 20th. Refinances were up 2% from the previous week, but were down 8% compared to last year. Meanwhile, purchases were 2% lower than the previous week and were down 22% on an annual basis. Mortgage rates reached their highest average level as they jumped up to 20 basis points to 7.9%. These high rates have led mortgage activity to stall its slowest pace since 1995, as it deteriorates housing affordability and keeps prospective buyers out of the market while also suppressing refinance activity. In China, authorities made a series of policy moves to combat its economic slowdown. The government shifted from the traditional growth model as it increased its headline deficit and unveiled a sovereign debt package amid a persistent housing downturn. President Xi Jinping also made an unprecedented visit to the central bank as a show of strength. These moves come as developer country Garden Holdings was deemed to be in default on a dollar bond for the first time ever. The company failed to pay interest on a note within a grace period that ended last week and is likely headed to what would be the biggest restructuring in China history. That is all we have for you this week. Join me again next Friday for the latest news brought to you by our capital markets trading desk right here at Sunwest Mortgage Company. Have a fantastic fall weekend and don't eat too much candy, okay? Buffy out.